with Ryan, and he is with New American Funding, a really trusted lender that I've been working for a while now. And there's a lot with the market changing right now. There's a lot of different things happening, and our goal is really to make sure that we help people, especially the first time buyer, to be able to own the home. And this is the question that we have right now. And Ryan, a lot of questions for the buyer right now is this really a good time to buy? The interest rates are high and the prices are high. So walk us through that.
We always answer it's a good time to buy. And that might sound salesy, but at the same time, going back in real estate, the sooner you get in, if you decide you want to buy a house, waiting does not help, right? The sooner that you commit and that you buy that property, you are going to be so thankful 12 months from now when you've already made that appreciation, and you know what I mean? And you recognize that you got in sooner versus waiting. So I would always say the sooner you can get in is better. But as far as like times a year goes, right now we're in the winter, which is it's a slower time of year for home buying, right? So in the history of home buying, January, February, and March have been considered the slowest months. Historically, the numbers are down for transactions that close, the number of buyers, and the reason is, people are busy doing things. They think it's a bad time. They want to wait till the summer. But being a smart buyer, getting in when there's less competition is always a good idea, right? If you can get in and you can have your choice of the properties, or you have a better chance of getting your offer accepted, it's an advantage for the buyer. The buyer has more pull than the seller, let's say, right? So when you place that offer, less competition, you can ask for credits, you can ask for price reductions, possibly, depending on the situation, you have more control to get something that's going to work in your favor. If you wait until summer, a lot more buyers coming in, and all of a sudden you're at the mercy of, competing against 10 other buyers and not getting your offer accepted. We always answer it's a good time to buy. And that might sound salesy, but at the same time, going back in real estate, the sooner you get in, if you decide you want to buy a house, waiting does not help, right? The sooner that you commit and that you buy that property, you are going to be so thankful 12 months from now when you've already made that appreciation, and you know what I mean? And you recognize that you got in sooner versus waiting. So I would always say the sooner you can get in is better. But as far as like times a year goes, right now we're in the winter, which is it's a slower time of year for home buying, right? So in the history of home buying, January, February, and March have been considered the slowest months. Historically, the numbers are down for transactions that close, the number of buyers, and the reason is, people are busy doing things. They think it's a bad time. They want to wait till the summer. But being a smart buyer, getting in when there's less competition is always a good idea, right?
A lot of times the buyer will say, well, you know what? I want to wait. I want to get my down payment ready. I don't have that down payment right now. And basically the interest rate. But here's the bottom line. And this is the experience that I have from the buyers. Buyers that waited and said they want to wait, look at how much the increase of pricing of our property. 1980, the prices were 140,000. Well, the year 1990 is 200,000. Right now, the average pricing is in the 600 to 700. So is it worth it to wait? I mean, really?
No.
And the key thing here is this. Do you really want to keep paying that rent where you're not earning any equity on the property and you're basically just paying the mortgage of the landlord? And we don't want that, right?
Yeah, unless you're the landlord, then maybe you want that. Right?
Exactly.
Yeah, but if you're the buyer, you do not want to pay somebody else's mortgage payment, right? It'd be better to pay your own. So yeah, just like you said, if you have no down payment, that is a common problem, and that's real for everybody. Having money in the bank, having savings and assets is hard. That's probably the hardest part about qualifying for a home loan. So I get it. A lot of people want to wait till they have a certain amount. But the thing is, you can qualify and buy a house with very little down. I mean, there's programs that, your standard FHA loan is 3.5% down. If you're a veteran, it's 0 down. And then on top of that, though, there are down payment assistance programs that can even make up that difference. So definitely worth calling and kind of exploring what options may be out there and see if there's something that helps you buy now so you're not waiting till those prices go up.
About a buyer that you helped last year. It's amazing. The
Yeah.
program that's available right now, not every lender are approved for this. And you, I'm pretty sure that based on your experience, you've been one of the lenders that got approved with this. Can you tell us more about that so far?
Yeah. So what I was telling you about is a program called Green Line, and this is a down payment assistance program. So this is specific for first-time home buyers, and it needs to be in LA County. The property they purchase needs to be in LA County, but this is a $35,000 grant that is non-repayable. So if you live in the property 3 years or longer, you do not have to pay this money back, and there's no interest accruing on it. So yeah, this is a pretty amazing program. I helped two families in November, and both using this program, and one got $35,000 for the down payment to go towards down payment closing costs, and then we're able to use some of that money to buy the interest rate down. So not only did they, help them get the property, but they were able to buy down the interest rate to where their payment worked for them. So that was one, and then the other one was it was amazing because she got the down payment assistance program from Green Line of 35,000, but she also was eligible and won the lotto pick for the California Dream for All, which was 20% down. So there was like 120,000 from the CalHFA program and then 35,000 from Green Line. So she had an amazing down payment, closing costs, everything was covered. And again, she was a first time home buyer that had no real money saved up for that down. So
That is brilliant. That is so great.
yeah,
So with that being said on that, so tell me, we've been asked a couple of times for, especially for the first time, but they don't really have that much money as a down payment, but they do qualify because they make the money to pay the
right.
mortgage. So is there any criteria for this that we have to educate the buyer, the first time buyer, to get
You have your
qualified?
standard criteria. You got to be able to qualify for a home loan. So we're looking at the standard, credit, employment, income, and assets. We got to look at that and make sure they are eligible. So usually we're looking at like a 620 or higher credit score, employment history, been on the job 2 years or longer. Debt ratio needs to be around 50% usually. So that
Ooh,
means that
mhm,
your mortgage payment plus your bills can't be over half of what your income is.
uh-huh.
So yeah, for that specific Green Line program, we just got to make sure we can qualify them for the loan, and then make sure that they're eligible for the program, which is the first-time home buyer living in Los Angeles County or buying in Los Angeles County, and their income needs to be under the area median. So
Great,
that's for the Green Line.
great. And they have to live on the property, obviously, right? It has to be
Yes, this is
occupied.
this is for first-time buyers to live in it, not for investors to use it to buy a rental. So
Exactly. So now let's say, I know a lot of buyers also have kids qualifying too. In that type of loan, do you have a limit on how many people that could join that loan? Or you basically, as long as you get those people that qualify for the type of home that they buy, what is the criteria for
yeah.
that?
So same thing. They need to make sure they are going to live in the property. So it couldn't be a co-signer like a family friend that already, or family member that already owns a house is going to help them qualify. That won't work. But if
Okay,
it is like mother, father, sister, son, they're all going to live in the property, we can put them all together.
okay. I'm gonna raise this question because it
Mhm.
happens a lot now where the parents are basically helping the kids to buy a home. So
Correct.
how does that work? Couldn't they actually have the parents give them, the down payment at the same time? The parents own a property, but the real buyer are the kids. How does that
So it
work?
depends on the exact situation, but from what you're saying, if there is let's say the parents already own a property and their child is going to
Helping the
college
children?
out of state, right? And they, instead of paying for a place for the kid to rent, they want to buy a house for the kid to live in or the
Right.
son.
Uh-huh.
But what we can do in that case, as long as the child is over 18 years old, we would put them on the application as the primary borrower. So we're saying,
Uh-huh.
hey, they're going to live there. We got to
Mm-hmm.
make sure their credit score is okay.
Mm-hmm.
Um, usually they're not employed, so they have no income. but that's where the parents can come in and we add them to the loan as a non-occupying co-borrower. So they are not going to live there, but we're using their income and credit along with the child's credit to make sure they qualify. And then in that case, you can do, you can do an FHA loan, 3.5% down.
But
And
does that qualify in the green loan that you talked
no,
about?
that would not qualify there because the parents would not be living in the property.
Okay, so basically they have to really live on the property, right?
Yes.
So
Yep,
far,
they do.
okay. Right now, being that the interest rates are high and obviously sometimes they cannot really afford it. In order for them to be able to do this, the one of the things that I do is I ask the seller to pay some closing costs. Now, we talked about this, that some of the closing costs can be used for buy down. Can you explain that to us right now,
Yeah,
Ryan?
definitely. That is a top strategy right now, right? To
Uh-huh.
get somebody comfortable with their payment. Like you said, the interest rates are a little bit high, so there's some payment shock usually going into like this payment's a little higher than what I expected. So in order to get that payment lower, if you can get a credit from the seller, we can use that to do a temporary buy down on the interest rate. And this has been very popular right now. So if the interest rate, let's say, is 7% on a 30-year fixed rate, and you get some money, we can use that to buy that interest rate down. And usually we do a thing called a 2-1 buy down. And what that means is the interest rate is reduced by 2% for the first year. So
Uh-huh.
if the rate's 7, we're going to buy it down to 5% for the first year. So that could greatly reduce the monthly payment for the buyer, right? It could be $1,000 a month that payment comes down. So the first year it's reduced by 2%. The second year it's reduced by 1%. So it would go to 6%. So now the payment, let's say they're saving $500 a month. And then on the third year, it goes to the regular rate and would stay there permanently if they never refinanced or did anything. So it's a great way to use the seller's funds to buy that interest rate and that payment down for the buyer.
After the third year, this is not what you say an adjustable rate. After that, it stays fixed.
Correct. Yeah,
Or
this is
set.
not an adjustable rate. This is just buying the interest rate down for 2 years off of that 30-year fixed rate. So
Mm.
there's not a risk of, it's not a risky loan because it's not like the payment is going to jump up on you and you didn't know about it. You know the whole time. You know this is where the 7% payment is. We're going to reduce it down for this year and we're going to, it's going to reduce for the next year and then it's going to go to that eventual, rate and payment. And if it goes there and stays there because rates are higher, then you're okay because you knew that was going to happen. But if interest rates drop like we do expect, we'd refinance you before you even got to that 7% rate. And that's really the idea is reduce that rate now. That'll, make up the time while the interest rates are high. And once they drop, refinance you out of that and you never even get to that 7% rate.
Right now, with this interest rates being high, right now you're basically just dating the interest rate, right? You're not
Yeah, yeah.
married to the interest rate.
You're
And
married to the house.
yeah, and I really see the real benefit on this is this, which I sometimes tell the buyer is this. The best part is they get to own their home better than
Yeah,
rent. That's one. Number two is that let's say in the third year, okay, obviously we don't know, we don't have a crystal ball, we don't know what's the rate going to be, but there's a very good chance that it will come down. Is that they own it for 3 years, and let's say on the third year, this is something that they cannot really, afford. They can sell the property, especially that the market is going up, is not going down, right?
correct.
Okay.
Yeah,
Yeah,
exactly.
absolutely. So it's really a great program and I really like it. And, I talked to the buyers about it. What sets you apart as a lender?
Personally, for me, what sets me apart is probably the fact I've been in the business a long time, 27 years in the business. So I've come across every type of transaction you could imagine. And you just gain a lot of experience with that. So right off the bat, you can pre-approve people very quickly and know if you're going to encounter any problems. If you do encounter problems, you usually know how to solve that problem. So I would say definitely pick somebody that's experienced. You don't want to jump into a big transaction,
Get really
buying a house, getting an online lender that you never met before or don't know anything about that person and you just don't want to get stuck. You do have usually some money on the line. There's a deposit there. So you want to make sure you got somebody that knows what they're doing and somebody that has control over the transaction. Like we're a direct lender. We are controlling the transaction. So we have everything within our fingertips to make sure it goes quickly and make sure that you're getting a good experience.
it's really working with somebody that and I've worked with you for quite some time now, is that somebody that they can trust. Well, I did have a lender already that got me approved. I get that. Though usually what I say is that, look, you could always, stay with the lender that you have. But the best part about this is that is getting your offer accepted. And because this lender has been in the business for a long time, the best part is if I know about your file, I can actually sell you to the seller of how qualified you are as a buyer. Would you agree to that fact?
Yeah.
Ryan? Yeah.
Yep. You need every little piece or every little, extra effort to get a buyer accepted right now and when you're competing and that is a huge factor, If we have control over the file, we can talk to the listing agent and tell them that they're approved. We can close in 10 days, that we have an appraiser already ready to go. Just little things that'll help them set apart from somebody else that's placing their offer.
And one last question, and this is also a very big concern for the buyer. Okay, so how many times are you gonna be running my credit and that my credit score is gonna come down?
One time.
How do
No,
you
we
answer
usually,
that question?
yeah, so credit is a big concern for everybody, but it's a little bit easier now. A lot of times we start with a soft pull on the credit, which does not ding the credit at all. It doesn't even count as an inquiry. And we can do a full pre-approval and everything based off that soft credit pull. And then once your offer is getting accepted or you're submitting an offer on a property, at that point, we probably would run the full credit just to make sure nothing's changed. And then after that, it shouldn't be run again. It's good for 90 days.
Uh-huh.
Usually you're in contract with the home and it's going to close within 30, so you don't have to run it again.
That is beautiful. Anything else that you can add? This has been very helpful. And really, I know with helping the buyers, it's a contribution to the
Yeah.
buyers, especially the first time buyer. And I know you're specialized in that. Was there anything else that we need to know as far as right now, that you're able to add, Ryan?
I mean, I would just say for first time buyers out there, pick yourself a good realtor and a good lender. Have a good team, like I said, that's experienced, that knows all the programs, and trust them. Stick with what they say, right? If they give you advice on what to do, it's for the buyer's own good, and we're helping you get your offer accepted or get a better deal, things like that. So don't fight it. Go with
Just
the
trust
expert's
them.
opinion, and we will get you to the finish line.
Awesome. That's
All
great.
right.
I thank you so much for your time. We don't want to take too much of that.
Okay.
And we're going to look forward again for the next time, more info from you.
Yeah. Thank you,
Right?
Tess.
Thank you.
Have a great day.
Okay, thanks. Bye.